This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pachardis. Thanks for joining us at XM.com. Asian stocks were under pressure on Wednesday as U.S. President Donald Trump gave his clearest signal yet that his administration is planning a response to China's tightening of its grip on Hong Kong. In a White House press briefing on Tuesday, Trump hinted at an announcement before the end of the week as U.S. anger at China continues to mount over a range of issues, with Hong Kong being the latest that could trigger a new round of sanctions. Yet the risk of a major escalation in tensions between the world's two most powerful countries could only dampen sentiment in Asia, with Chinese and Hong Kong shares leading the way down. But the mood elsewhere remained buoyant, including in Tokyo, where the Nikkei 225 soared to a near three-month high at the close, boosted by the announcement of a $1.1 trillion virus stimulus package by the Japanese government. Shares in Europe also extended yesterday's gains at the open, and U.S. stock futures suggest it will be second time lucky for the S&P 500 to close above the key psychological 3,000 level after failing to do so yesterday. The mood was much more cautious, however, in FX markets, with safe haven currencies rising broadly against their peers. The dollar index edged up 0.25%, though the greenback was flat against the yen and down versus the loonie. The Canadian dollar finally broke through a key resistance yesterday as the reopening of economies around the world lifted sentiment around the growth outlook. The Australian dollar also held firm, slipping very slightly as the risk-on mood eased a little today. Unusually, gold ticked lower on Wednesday, shrugging off the growing threat of U.S. sanctions on China, even though the precious metal has been more accurately tracking virus and geopolitical risks than equities have during the pandemic. The euro also headed lower, unable to build on yesterday's impressive performance amid doubts about whether the French-German proposal for a €500 billion virus recovery package would get the backing of other EU members. The European Commission is due to unveil its idea on a rescue fund later today, and all in all, it's looking like another case of long drawn-out negotiations, followed by a too little, too late plan. This was today's Daily Market Comment. Thanks for joining us at XM.com.